Now, when a bank makes a loan, it creates money by depositing a credit on your demand or sight account. And then you as a borrower can write a check or tell the bank to make a money transfer. And Fisher said, stop to this, put a stop to this, make it 100% by issuing it through the Federal Reserve. And then every depositor in the United States that gets a loan must get Federal Reserve money backing for his demand deposits that he has in the account. The banks create money is what we say because it's deposit. We should correct ourselves in the use of our language and say the banks create deposit credit, but only the Federal Reserve creates money, meaning legal tender, which has to be accepted if it is in the form of a bill. The federal government has that big debt because they are prohibited from putting their debt in the form of central bank notes into circulation. This was Irving Fisher's proposal. It was tried again and again, and the bankers always run up against, they are like the secret government behind the elected government, the bankers, with all their money power and all their influence. They do not allow the Bank of Canada to provide the money to the federal government to spend it into circulation. They say no. The federal government, if they are in need of money because they have a deficit, they must borrow from us bankers. You see what I mean? So we have the bankers standing in the way of national welfare programs, national housing programs that cannot be done, or to help the poor, or infrastructure or education that cannot be done because the federal government pays so much interest on bank-created money, and the banks create it out of nothing.
Could we go beyond money as we've known it? Could there be a new basis, a fresh concept, a design that could more effectively address the real purpose of money in the 21st century?